Hello and good evening, everyone, and welcome to this live session. Yes. Hello, good evening, good evening, good evening, Kirti, good evening, Rajiv, good evening, Zaina, Firoz, Kavya, Anuraj, Jyotika, Chirag Khemani, Sai Luthra, Lavanya. Good evening, everyone, and welcome to this live session. And yes, we are going to complete the GST in this marathon series. And yes, we are going to rock in our examination as well. Good evening, everyone. Please tell me if I'm audible and visible to all of you. Am I audible and visible to all of you? Yes, to my competitors, I'm not audible or visible. Those who steal my name and those who take my name as their name and they change their username just as they did yesterday. For them, I'm not audible and visible. Yes, perfectly audible, sir. Perfectly visible. So yes, so guys, are you guys ready to continue our GST marathon? Because today we are going to start the most important topic of our syllabus, which is ITC, Input Tax Credit. From Kerala, big fan, Sir Rajiv Rajkumar. Thank you so much, Rajiv. Kirti Batra, Ujjal Ghosh says yes. So guys, how's the Josh? Let me see in the chat box because we are going to start one of the most important topics of today's syllabus. Yes, please write in the chat box. Are you excited? Sai Luthra says exhausted. Why Sai Luthra? What did you do in the entire day that you are so exhausted? Yes. Hi, sir. Hi. Yes. Hi. Anurag says hi. Mansi says hi. Yes. Okay. Reshma Rajkumar. Good, guys. Absolutely hi. Yes. Yes. Good. So yes, we are going to start one of the most important chapters of today's of GST for all of you. Name of the chapter is ITC, Input Tax Credit. What is Input Tax Credit? Input Tax Credit is actually the heart and soul of GST. Yes, guys, heart and soul of GST is Input Tax Credit. Why is GST successful? What is the reason behind success of GST, not only in India, but the entire world? What is the reason why GST is such a proficient indirect taxation? Everyone is satisfied with the way GST works. Yes, there are some teething issues. There are some procedural lacunas which are there, which are in the process of getting plugged. But overall scheme, in the overall manner, guys, the double taxation, the cascading effect of taxation has been eliminated after GST has come into picture. So GST is, yes, the heart and soul. ITC is the heart and soul of GST. GST is GST because of ITC. So as it is said, behind every successful man, there is a woman. Guys, I would say that behind GST, behind successful implementation of GST, there is ITC. If ITC was not there, then GST could not have been as efficient, as proficient as you can see it right now. In its current state, GST is actually proficient, is actually efficient because of ITC. So ITC, I'm not exaggerating, but ITC is the heart and soul of GST. GST is absolutely, useless, is absolutely toothless, is absolutely futile without ITC. If ITC provisions are not there, then effectiveness of GST provisions will be compromised, will not be as much as they would have been after the ITC has kicked in. So ITC is definitely the heart and soul, the main thrust, the platform of GST is ITC, which is Input Tax Credit. So what is the meaning of input tax credit? What is the the meaning of definition of input tax credit, and how is input tax credit so useful? Let's see, guys, how is it so useful? Reason 2, tax compliance followed by supplier and recipient. Yes, GST success is also dependent on tax compliance, which is followed by suppliers and the recipient. Now, guys, what is so special about ITC? Why is ITC so special? And sir, why is ITC the heart and soul of GST? Okay, guys, so I'm making a standard two leg diagram for all of you, which is one leg there is supplier of goods and services, other leg there is recipient of goods and services. Okay, supplier buys goods and services like raw material from some external agencies. Supplier produces or manufactures the raw material internally and supplies it further to the recipient. Suppose the raw material has costed amount of 50,000. Suppose the amount further which is processed is sold at 75,000. Now at 5,000, suppose GST rate is 10%. Okay, let us take a very, very simple use case. It is 10%, then 5,000 is the GST amount. So total amount which the supplier has to pay is 55,000 to the raw material vendor. Now supplier further forwards this particular material to the recipient. It also pays 10% as GST. So guys, 80. 2,500 is the amount which is to be billed to a recipient. Now over here, there is a chance that double taxation happens. But Government of India, after ascertaining the outward tax liability, this is the outward tax liability. Government of India, after ascertaining this outward tax liability, allows you to subtract the liability which is already paid to Government of India and allows you to pay only the differential amount, which in this case is 2,500. So Government of India permits taking ITC, input tax credit. What is input tax credit? Input tax credit means the tax credit which is available for the inputs which are used in the manufacture process or in the production process. That is known as input tax credit. Now inputs which are used, they are subject to GST, and yes, the GST which is paid on the inputs, they are available as ITC, input tax credit in case of in case of the further supply. So this is why, this is the reason, guys, allowing of this particular amount as a deduction over here, this step which is done by Government of India, this step is the step because of which cascading effect of GST of tax is not there, it is eliminated. This is the step which provides the relief from double taxation. This is the step which doesn't let the prices of the goods go very high. The inflation doesn't hit the prices in a very severe manner. This is the step where the taxes paid at one limb of the transaction are allowed as a deduction from other limb of the transaction. This is the entire thrust of GST. Now guys, under this scenario, would it be wrong to say that yes, this step is the heart and soul of GST? And what is this step? This step is actually ITC. What is 5,000? 5,000 is actually ITC, input tax credit. credit 5,000 rupees. This is ITC, and yes, this ITC is actually the heart and soul of GST. If this deduction is not permitted, if this 5,000 is not allowed to be set off over here, then there will be double taxation, cascading effect of taxation, because 7,500 would be paid by the supplier to Government of India. It will add 7,500 in the bill and give it to recipient. So recipient's cost will be increased. This 5,000 will also be billed over here, and this 5,000 will also become a cost to the recipient. So ITC is the effective way to control the prices of the goods and also to eliminate the cascading effect of tax. Tax on taxes evaded, tax on taxes spared. It is not done because of one reason, which is ITC. And that is why I say, guys, this particular chapter is the heart and soul of GST. This particular concept is the heart and soul of GST. But yes, government has put some checks and balances surrounding the GST, the ITC credit which is availed, because many people misuse the provisions of ITC, and therefore government has put some checks and balancing surrounding ITC. In this particular chapter, we are going to check those checks and balances, those requirements which are required to be fulfilled before an ITC is claimed by any person. So in this chapter, we are going to study about ITC. We are going to study about what, on what products ITC will be available, what products ITC will not be available. All these things will be dealt with in this particular chapter. And one more very important thing which will be dealt with in this particular chapter, how to split ITC. How to split ITC. So why do you want to split ITC? I will just discuss this in a while. This chapter is dedicated to, yes, one very important concept, which is splitting of ITC. All right. So guys, let us discuss certain basic fundamentals before we start the chapter, okay? All right. So, guys, some basic fundamentals, okay? Some very, very basic stuff, okay? Suppose manufacturer is manufacturing a good which is A. It uses some capital goods, inputs and input services for manufacture of this particular good. It supplies the goods further to the recipients. during the process of supply, this good is exempt from GST. GST is not leviable on the good which is supplied by the manufacturer. If the GST is not leviable, goods are exempt, the goods which are produced are exempt, it means no output tax liability is there. In this case, guys, ITC is not available. Very, very logical. Very, very logical. Okay. Very logical, guys. Yes, apportionment of GST. Correct. Correct. Okay. Next. Case 2. Case 2 says, okay, again, capital good, inputs, input services used in manufacture of certain goods, and those goods are actually zero rated supplies, which means they are exported outside the country. When they are exported outside the country, it means that these exports are not leviable to GST and they are zero rated supply, which means that no GST is applicable on these particular goods. But I've already told you that these are damad goods, which means that even when they are not having any output liability of GST, even then ITC will be availed in this particular case, and refund will be granted of the entire amount of ITC, because we give all possible benefits to our Damadji. Case number 3. Case number 3, where the capital goods, inputs and input services are used in manufacture and it is further supplied, and the supplies are taxable supplies, which means normal goods which are neither exempt, not nil rated supply, not zero rated supply. They are taxable supplies, so GST is leviable, which means outward tax liability is there in this particular case. Then, guys, ITC will definitely be available in these cases. Obviously. Okay. Then case 4. Case 4. You are using capital goods, inputs and input services to manufacture something which is taxable supply, but that taxable supply is not for business purpose. It is for non-business purpose. That is, it is for personal purpose. The consumption has been done on a personal basis. There's a personal consumption which has been done. In this case, ITC is again not available. Input tax credit will not be available in this case. Next case, guys, where nil rated goods are produced, which means that the goods are although eligible for GST, but as of now, the rate of GST which is specified in these goods is nil or 0. Again, ITC is not available in this case. And very, very obvious, guys, where output tax liability is not there, of course, the ITC will not be there. If output tax liability is there, only then ITC will be there. And now this is the case because of which we are studying this particular chapter. If this case is not there, then this chapter would not have been there in your syllabus. What is the case? Case is, you are using capital goods, inputs and input services to manufacture both exempt supplies as well as taxable supplies. So ITC which is available is used in exempt supplies as well as the taxable supplies. In both the supplies, ITC is used. In such a case, guys, we will apportion the ITC amongst exempt supplies and taxable supplies. We'll split the ITC amongst two parts, exempt supplies and taxable supply. And during this process of splitting, of course, we will consider certain important things which will be required to be considered by us. Rule number 42 and rule number 43. So this is apportionment of ITC. And yes, this is the main thing because of which we are studying this chapter. Otherwise, this chapter would have been a cakewalk. It would have been a topic, not a chapter, not a separate chapter, but just a topic in between, either value of supply or time of supply, just a chapter. All right. Now let's start the chapter. We have studied the basics of this particular concept called the ITC, input tax credit. And yes, guys, this is the most important chapter of your syllabus, not only for CMA Intermediate students, but also for CMA Final students. For both of them, this chapter is really, really important. Okay. So input tax credit, ITC. Again, capital goods, inputs and input services. Capital goods, inputs and input services. So these three things are used to manufacture some goods or deliver some services. These three things are used: capital goods, input or input services. These three things are used to manufacture certain goods or some services. Now, when these services or goods are manufactured, these are made, then obviously there's some ITC which is available on these three things. Now, you need to tell me what is the relevance of goods which are used or intended to be used in business. Will question is, will loss in transit be considered as use in business? Will loss in transit be considered as use in business? loss in transit. Will loss in transit be considered as use in business? Kavya says, please explain point number 6 again. Okay. So case number 6 is where we are using capital goods, input and input services. So Kavya has said, please discuss point number 6 again. So the case where capital goods, inputs and input services are used to produce both the exempt supplies as well as the taxable supplies. In this case, ITC, which is available on inputs, that ITC will be apportioned between exempt goods and taxable goods. That is why the splitting is required. That is why the apportionment is required in this particular case. That is case number 6. Okay. So if there's loss in transit, is it required? Answer is no. Yes, absolutely, guys. No, 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 no. So it should actually be used in business. If it is not used in business, then ITC will not be available on the capital goods or input services. Now, another question to all of you. If I purchase the inputs today and use them after 6 months, I purchase the inputs today and use them after 6 months, will the ITC be available today or after 6 months? Please write in the chat box. When will the ITC be available? Today or after 6 months? When will the ITC be available? Kaju Singh is wrong. Anuraj today. Zainab today. Very good. Superb. Yes, guys. The ITC will be available today. We don't consider whether that particular good is manufactured or not. Even if it is manufactured after some time, then also, guys, the ITC will be available today. But of course, if you do some hanky-panky stuff, if you lose those goods, then reversal provisions are obviously there in case of ITC. Another question to you. In case of capital goods, again, in case of capital goods, can we claim the ITC in year 1? In case of capital goods, can we claim the ITC in year 1? In year 1, can we claim the entire ITC in case of capital goods? Please write in the chat box, in the comment section. Please write it. Yes, absolutely yes. Very good answer, guys. Very, very good answer. Yes, we can. Yes. Oh, wow. Kaju Singh has given one very important reason. If depreciation is not taken on the GST amount as per the Income Tax Act. Perfect answer, Kaju Singh. Perfect answer. If you have taken depreciation according to Income Tax Act, then ITC is not available on capital goods. Very, very good answer by Kaju Singh. I don't know Kaju's real name or it is artificial name, but Kaju Singh is a very interesting name. And I don't even know Kaju Singh is a boy or a girl. Kaju Singh, what is Kaju? Boy or a girl? Okay. Now, let's start the most important section of our syllabus, guys. Eligibility conditions, section 16. Section 16 will tell us what are the conditions which are required to be fulfilled in case of ITC. Because I've told you guys, because to claim ITC, someone can, someone can actually, manipulate the data, can manipulate the facts, can manipulate the figures to claim ITC. And to avoid that manipulation, government has given strict guidelines, strict conditions. If you satisfy these conditions, only then ITC will be claimed. Otherwise, ITC will not be claimed. So what are the eligibility conditions according to which ITC is to be claimed? Section 16 of the CGST Act. We are going to study the eligibility conditions for ITC. Okay. Yes, absolutely. Wow. Tota section. Yes, this is the parrot section. Yes. So, guys, since ITC is the core of the GST Act, and it is very, very, very important for any person to claim ITC. Otherwise, he have to pay double the taxes or triple the taxes. That is a problem with ITC if ITC is not given to a person. So government uses ITC to ensure that the assessee makes the necessary compliances. If assessee does not make the compliances, then government would withdraw ITC and ensure that the compliances are made by the taxpayer. And that is the reason why we say that this particular section refers to the parrot and king section. The parrot and the king section. Whenever government wants some compliance to be done, some discipline to be followed by the taxpayer, it always and always, rotate the ITC. ITC is like parrot of the king. Okay, whenever the king, whenever you want to, do anything, then you actually, because king's soul was there inside the parrot. So whatever you want king to do, you just instruct parrot, and the king would do the same thing. Similarly, government, whatever government wants you to do, it will always use ITC as the tool. It will withdraw ITC if you do not follow the commitments which are given to Government of India. So government uses this ITC as a tool to make sure that the assessee complies anything and everything. Okay, guys. Superb. All right. So what are the eligibility conditions for claiming ITC? Section 16. Section 16, along with the rules, okay? Rules and section 16 combined together. Very, very important section, guys. Let's study the section. Okay. First of all, you should be a registered person to claim ITC. Plus, there should be a credit in electronic credit ledger. So whenever ITC is there, then its credit is there in the electronic credit ledger. So you should have credit in electronic credit ledger, and you should be a registered person. If both the conditions are satisfied simultaneously, then guys, you are eligible for claiming ITC. Condition number 2, section 16(2), possession of invoice or debit note. Whenever you have invoice of or debit note, only then you are eligible to claim the ITC. If you do not have invoice, and that too in original, you do not have right to claim ITC. So you should possess invoice which is raised on which you are willing to claim ITC. So recipient will always have the invoice from the supplier side to claim ITC of the tax which is paid by the supplier. Then details of invoice furnished in a statement by the supplier. So these details of the invoice are to be furnished in a statement by the supplier. The statement is GSTR1. The details are to be submitted to Government of India by the supplier. Supplier, if he doesn't furnish these details, then guys, the ITC will not be available. So second condition is that details of invoice should be furnished in the statement by the supplier. Third condition is receipts of goods and services. Now, only when goods and services are received, only then GST will be claimed. So if there's a delay in receipt of goods and services, but you have already got the invoice, guys, you cannot claim ITC, because unless until goods are received, the ITC cannot be claimed. ITC cannot be claimed by you. If the goods are received in lots means some parts. If some parts goods are received, then when the last part is received, only then ITC can be claimed. Then tax paid to government by the supplier. This is an important requirement, that the GST which is collected by the supplier, that is to be deposited to government treasury within time. If you do not deposit the GST to government treasury within time, then guys, GST credit, ITC credit will not be available in your case. So to make ITC credit available in your case, supplier must deposit the cash to Government of India, pay the amount to Government of India. Furnished return. Yes, return has to be furnished under GSTR 3B. Now you guys tell me, what is the due date of filing GSTR 1 and what is the due date of filing GSTR 3B? What is the due date of filing these two returns? Please tell me in the chat box, what is the due date for GSTR 1? What is the due date of filing GSTR 3B? Very, very easy question, guys. You're already aware about it, and this should be in your mind absolutely fresh. Okay. Then payment of invoice by the recipient within 180 days of issue of invoice. Very, very important condition, guys, that the recipient should make the payment within 180 days, which means within 6 months, the recipient should make the payment of ITC to of the bill of the invoice to the supplier. That is very, very important. Perfect. No, Lavanya. 31st December is the wrong answer. Yes, 20th is the right answer. Perfect. Perfect. Very good answer. Very good answer by all of you. Superb. Okay. Then payment of invoice should be done by the recipient within 180 days. So within 180 days, the invoice should be paid by the recipient to the supplier. That is to be ensured while the ITC is required to be availed. Okay. Then re-availment of credit on payment of invoice. If payment is not made within 180 days, then the ITC will be lapsed, and if ITC is lapsed, then it can be re-availed whenever payment is done for this particular invoice. Now these are the conditions which are required to be fulfilled for claiming the ITC. There are certain extra conditions, guys. Depreciation must not be claimed on tax paid for capital goods. Whatever GST is paid on capital goods, the depreciation must not be claimed on it. If depreciation is claimed on it, then the ITC will not be available on the GST which is paid on the capital goods. If capital goods are there, then depreciation must not be claimed on the GST component, not on the main component, but on the GST component of capital goods. The depreciation must not be claimed by the taxpayer. Then what is the time limit? Time limit is due date of filing return of November of the next financial year. So guys, ITC can at max be claimed during earlier of due date of filing of annual return and due date of filing return of November of the next financial year, whichever is earlier. This is the time limit up till which ITC can be claimed. If you do not claim ITC within this time limit, your ITC shall be lapsed, and in the next year you won't be able to claim that ITC. Then no ITC in case of fraud. Okay, documentation which is required for claiming ITC, guys. There are certain mandatory documentation which are required. Invoice or debit note should be maintained by you. Invoice or debit note should be maintained by you. Bill of entry should be there. In case of imports, additional custom duty is paid according to bill of entry. Then if revised invoice is there, then revised invoice should also be there in your documentation. So what is revised invoice? Revised invoice means, guys, when during the initial period of your registration process, so registration GST requires time. Okay, now on say 15th you are eligible for levying GST. Okay, registration number is received on 22nd. So in the intervening period, you will issue invoices in which you are levying GST, but you don't have GST number on that particular invoice. So whenever the registration will come, you will issue revised invoice for that intervening period from 15 to 22nd. You will issue revised invoice to the people, to your recipients, and that is known as a revised invoice. So in case of revised invoice, the the ITC can be claimed in case of revised. So revised invoice copy should be maintained by you. That is a requirement for claiming ITC. ITC will not be available if you do not have the revised invoice. And now, guys, very important, guys. How will the GST be apportioned? ITC, sorry, how will the ITC be apportioned? What is the need of apportionment of ITC? And I've already told you, this is the most important topic in this particular chapter, which is apportionment. In the examination, a question from apportionment is more likely to come. So please read this particular section very carefully. Apportionment of credit, section 17, 1, 2, and 3. So it says that ITC on inputs used for taxable supplies or zero-rated supplies, the ITC will be available. No problem in that. Complete ITC is available if the inputs are used to make taxable supplies, or if the inputs are used for making zero-rated supplies. 100% ITC will be available in that case. Then ITC on inputs used for exempt supplies, non-taxable supplies, or nil-rated supplies, ITC will not be available. Simple. If the inputs are used for making exempt supplies or non-taxable supplies or nil-rated supplies, then ITC will not be available in these particular inputs. A very straightforward case. Now comes a very technical and a complicated case. Okay. Now comes a very technical and a complicated case. What is the technical case? Technical case is that ITC is paid on inputs which are partly used for taxable supplies, partly used for exempt supplies. If ITC is availed on inputs which are partly used for making taxable supplies, partly used for making exempt supplies, then, guys, apportionment of ITC will be required. Apportionment of ITC will be required. And from here, the concept of apportionment arises. Similarly, guys, we can have inputs which are used for making business purpose goods as well as non-business purpose goods. Again, ITC will be apportioned. ITC will be apportioned because ITC which will be apportioned on the business purpose goods, only that will be allowed to be claimed. ITC apportioned to business purpose goods, that will be allowed to be claimed. ITC which is levied on non-business purpose goods, that will not be allowed to be claimed. That is the important function over here. Okay, so apportionment of ITC. Apportionment of ITC can be done in two ways. ITC on inputs and input services, Rule 42. ITC on capital goods, Rule 43. So guys, these are the two most important rules which are required to be studied over here. Okay, so got it. So Rule 42. Now guys, this is an important rule. And yes, from an examination standpoint, a small question, not a small question, but a big question, say 8 marks question can come from this particular concept. It's an important concept, which is the computation of, apportionment. How will the ITC be apportioned between exempt and taxable supplies? How will the ITC be apportioned between exempt and taxable supplies? That is the issue under consideration right now. Okay, the method is very, very simple, guys. The method is really simple. Okay, let's start the method. Okay, so these are different baskets which are there in which the ITC is stored. These are different baskets which are there in which the ITC is stored. Okay, let us read these baskets one by one. The first one is total ITC which is available. Total ITC which is available, including non-business supplies, exempt supplies, block credits, taxable supplies. Everything is included in this particular bucket. So the idea is to remove the non-business supplies ITC, remove the exempt supplies ITC, remove the blocked credit ITC. We need to remove T1, T2, T3 from this particular bucket. Bucket is full of ITC. It is attributable to both the taxable supplies as well as the exempt supplies. Both are there, which are there. Now, first of all, we are going to reduce the non-business supplies, the exempt supplies, and the block credit. T1, T2, T3 will be reduced. Once we reduce T1, T2, and T3, we get on to the electronic credit ledger, which will have taxable supplies, and taxable supplies will be partly taxable, partly exempt, and partly business, partly not non-business. So both of these elements will be there in this particular bucket now. So now we are going to split or apportion this particular bucket into the taxable and non-taxable supplies. Now, how will we do that? Over here, we are going to subtract the taxable supplies, because on taxable supplies, guys, 100% credit is available. Okay, so if we can identify that these input tax credit are attributable to taxable supplies, if we can identify it, then we will reduce it from here, because this will be claimed as it is to the fullest amount as ITC, because entire ITC is available in this particular case. And guys, one very important thing, and thanks Zana for reminding me, these numbers should be mandatorily learned by you. T1, T2, T3, T4. These numbers should be learned by you, because in the examination, the examiner would want these numbers to be there. You cannot say, sir, I don't like the alphabet T. I want to use the alphabet O. O1, O2, O3, O4. No, not permitted. Because the law is written in the same manner. So you have to remember the alphabets and the numbers well in this particular chart. It should be written as it is in the examination. Okay, sir. So we reduce the taxable supplies. The reason is that these taxable supplies need not be split. The credit of these supplies will be taken as it is wholly in the electronic credit ledger. Okay, if we reduce the taxable supply, what are we left with? We are only left with common credits. Common credit means credits which are attributable to taxable and exempt supplies, credits which are attributable to business and non-business supplies. Now, this is the combination of ITC, ITC combined in two forms, which is left over with us. No other ITC is left over with us. The combination is left over with us. Okay. So now what will happen to this common credit? Okay, we will apportion the common credit between the taxable and exempt supplies. We will apportion the common credit between exempt and taxable supply. This is what we are going to do now. So common credit is C2, and C2 will remain C2 only. C2 cannot become S or T or anything else. Okay, C2 will remain C2. When C2 has partly taxable and partly exempt and partly business and partly non-business credit, we need to exclude the credit attributable to exempt goods, and we need to exclude the credit attributable to non-business goods. This is what we are going to exclude. This is what we are going to remove. Okay, so for removing these, we have two steps. For exempt goods ITC removal, we'll have this step, And for non-business, ITC removal, we have this step, this step. If we remove this and this, then we are left with eligible common credit. Simple. So what are these steps? Steps are to be remembered carefully. This is D1. D1 is C2, which is the common credit, divided by exempt turnover. Divided by total turnover multiplied by exempt turnover. So whatever turnover is total turnover of the company, will divide this credit with that turnover and will multiply it with the turnover which is the exempt turnover. And this is how the credit which is to be excluded is computed. D1 is computed using this manner. Similarly, guys, non-business. Guys, in case of non-business, government has given a standard 5% allowance for non-business purposes. So you can multiply 5%, C2 multiplied by 5%, and that will be reduced as non-business credit. Non-business ITC credit is this particular amount, D2. So from C2, if you subtract D1 and D2, you will get the common eligible credit, which you will claim as ITC in your return of income. In your return of income, it will be claimed as ITC. Yes, even if non-business is not given in the question, even given in the question, even then, guys, you have to subtract this 5%, assuming that non-business is there. And yes, do put a note that it is assumed that non-business consideration is also there in the ITC. So this is how eligible common credit will be availed. Okay, so C3 will be availed as ITC entirely. And please tell me, out of this chart, which alphabet is to be claimed entirely? One C3 is to be claimed entirely as ITC. Out of this chart, which one alphabet is to be claimed entirely as ITC? Please tell in the chat box. ET over TT. Yes, ET over TT. Please tell in the chat box that from these sections, from these all alphabets and symbols, which one is to be claimed entirely? Just like C3 is to be claimed entirely. Perfect. Perfect. Very good, Kaju. Very good, Zainab. Very good. Superb. T4 is to be claimed entirely. So this is the way the credit is apportioned. This is the way the credit is apportioned between the exempt and taxable supplies. Now coming on to rule 43, which is there in case of capital goods. Rule 43. Very good. T4 is the right answer. Kirti Batra has written T, wrong answer. Superb. 43, okay. Now in case of 43, when capital goods are under consideration, then we compute the common credit, and common credit is to be computed in the same manner as we have discussed in rule 42. Okay, common credit is to be computed in the same manner. Now the question is how to apportion the common credit. How to apportion the common credit. Now to apportion the common credit, C2 is the common credit. To apportion the common credit, we will have ITC, which is attributable to exempt supplies. And how do we calculate the ITC which is eligible for exempt supplies? Guys, we take C2, which is common credit, divided by 60. 60 is assuming that life cycle of the capital goods is 5 years. Okay, 5 multiplied by 12 is 60, multiplied by ET over TT, exempt turnover over total turnover. ET over TT will multiply C2 by 60, and then we are going to have the ITC which is attributable to exempt supplies. This is how the ITC is to be claimed. On a monthly basis, the ITC is to be claimed. So monthly ITC is computed using this formula. Okay. Now in case of non-business, if we have to churn out the non-business component of capital goods, guys, D2 is not computed in case of capital goods. In case of capital goods, D2 is not computed. Okay. So non-business is never computed in case of capital goods. It's a standard law. Okay, sir, got it. So this was the credit for capital goods and the normal inputs and input services. Now coming on to the apportionment of credit in case of banks. Guys, in case of banks, there are special provisions with respect to credit because banks face a lot of problem for its ITC credit, because bank has so many customers, bank has so many suppliers and vendors and etc. etc. Then it's very difficult for the bank to maintain an exact detail of the credits and the ITC which is available and gone. So it's very, very difficult for the banks to avail this, to have this record. So for banks, there has been a special provision which has been given to banks that they can avail 50% of the credit of ITC. Okay, they can avail 50% of credit of ITC, and they can be freed from all the compliances. They can be compliances can be actually so I'll tell you what, banks actually are supplying mostly the exempt services, because the nature of work which bank has is to give interest, okay, interest on the loans which are taken by the bank, credit card charges, then credit guarantees, bank guarantees which the bank takes against some interest or against some extra amount. So all these things are exempt supplies in case of banks, exempt services in case of banks. And because of the exemption which is given, mostly banks lose out on ITC. Mostly banks do not have ITC credit limit. Mostly banks do not avail ITC. That is the very important consideration for banks. Now this was a big loss to bank. To Government of India gave bank an option: either avail provision of section 17(2) and use the normal cases where ITC is claimed, use the normal case, or avail 50% of eligible ITC. You only avail 50%, rest shall lapse. So this option is given to bank to benefit them, so that ITC is availed by them, at least in some proportion. Okay. Then if the bank supplies some services to its DDP, deemed distinct persons, if the bank supplies services to its DDP, then normal provision of section 17(2) will apply, and 50% benefit will not be given in this particular case when there is a transaction between the related party. Bank is transacting with the related party. 50% benefit will not be available in this particular case. Okay, sir, got it. Now coming on to a very, 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 very important section, which is block credit. Section 17, subsection 5, block credit. Please mark it as very, very important section. Okay, very, very important section. So guys, in this particular, I think banks will avail 50%. Yes, absolutely. Banks will mostly claim 50% of the credit, because usually they provide services which are in the nature of exempt services. So they will mostly use the 50% benefit. Okay, now comes a very, very important section of your syllabus, which is blocked credit. What do you mean by block credit? Block credit means that in these cases, even when the taxpayer is eligible for claiming ITC, we will not give him ITC. In these cases, even when the taxpayer is ready to claim ITC, we will not give him ITC. That is the meaning of block credit. Sir, is there any rationale? Is there any reason because of which the government is not giving an ITC? Guys, there can be reasons, there could be reasons, but reasons are not disclosed. So we are not aware, and we are not bothered also. Once these things are seen, we will say that ITC will not be available on these particular things. Let's see what are those things. Okay. Okay. So AAA and AB. AAA and AB. Motor vehicles, vessel, aircraft for transportation of people. So if the organizations own motor vehicles which are used for passenger transportation, which are used for traveling of employees from their home to factory and factory to home, something like that. If the businessman owns the motor vehicle, vessel, aircraft for transportation of people, ITC is blocked. It is not available. But yes, if the motor vehicle and vessels are there for transportation of goods, then the ITC is available. Plus one more thing, the related insurance, servicing, repair, maintenance expense, the servicing, the insurance, the repair services, everything which is related to the motor vehicles, vessels, aircraft, the ITC of these services will also not be availed by the businessman. So businessman will not have the benefit of ITC for the insurance, servicing, repair of these motor vehicles, vessels, aircrafts, etc. Okay. Then second one is supply of specified goods and services. Clause B. Clause B. Clause B is if we supply these specified services and specified goods, then guys, ITC will not be available. What are they? Number one, foods and beverages. So in your office, if you get foods and beverages, and the foods and beverages are served to the employees, or anything of nature of eateries are served to the employees, then the ITC is not available on foods and beverages. Outdoor catering. If outdoor catering is organized in an organization for, say, annual function, or any any event which is required to be done within the organization, in that case, guys, In that case, guys, the ITC is not available. On outdoor catering, ITC is not available. Then beauty treatment, cosmetic and plastic surgery. If expenditure is incurred for beauty treatment, cosmetic and plastic surgery, ITC is not available. Sir, which organization will do such an expenditure, guys? Airlines. In case of airlines, or in case of TV industry, production media industry, movie, Bollywood. In this case, there might be expenditure over beauty treatment, cosmetics, and plastic surgery. ITC will not be available on such treatments, on such services which are availed by such industries. Then health services, any health services which are acquired during the course of business, then they are also not available for ITC. ITC cannot be claimed on the health services. Then leasing, renting, hiring of vehicles specified under clause A or AB. So these vehicles, even if they are being leased or they are being rented, then guys, ITC will not be available in this case, because thing which is cannot be done directly cannot be done indirectly also. So directly you cannot claim ITC of these vehicles. So someone will think that, okay, let us claim it indirectly. Let us take these on lease, and on lease, whatever payment is done, GST will be paid. We will claim the credit. You will not be allowed to claim the credit. Even leasing, rental, hiring of vehicles specified under A and AA, GST will not be applicable in this particular case also. Okay. Next, life insurance or health insurance. If life insurance, health insurance premium is paid to the to the insurance companies, then ITC is not available on such things. Membership of club, health, fitness center, if paid by the organization on behalf of the employees or anyone else, then ITC is not available. Travel benefits for employees, LTC, leave travel concession, ITC is not available. So these are the certain specified cases where ITC is not available. Okay. Coming back to our main clauses, the main forbidden ITC cases: works contract, goods services for construction of immovable property, except for plant and machinery. So any works contract or goods and services used for construction industry, construction of immovable property, okay, that in that case ITC is not available. Works contract, goods and services used for construction of immovable property, ITC is not available in this particular case. Then tax paid under composition levy. Of course, guys, if you are paying taxes under composition levy, then of course the law is very clear that you are not allowed to take ITC. Goods and services received by non-resident taxable person. So yes, the ITC is not available in this case also. Goods and services used for personal consumption. If you use goods and services for personal consumption, no ITC. Goods destroyed, stolen, lost, written off, disposed of as gift, free samples, if you have distributed free samples, or if your goods are disposed of or destroyed and they do not get to the recipient, ITC is not available. Tax paid under fraud. If tax is paid under fraud and fraud has been unearned by the GST department, then ITC is not available as a penalty in the case of fraud also. So these are the cases of block credit. In these cases, guys, credit will not be available even if the assessee is eligible for credit. It is not available. Okay, sir. Got it. Okay, this is related to motor vehicle. We have already discussed motor vehicle case in brief. Okay. Works contract also we have already discussed. Works contract part. Yes, ITC under special circumstances. This is very, very important, guys. Okay, this is very, very important. Section 18. Section 18. In this, we are going to discuss the GST on opening stock. In this, we are going to discuss the ITC on opening stock. Section 18. Okay. So guys, what happens is whenever ITC is claimed on the opening stock, and opening stock is still there, as you are aware that soon as the stock is purchased, guys, then the stock which is purchased, when the stocks are purchased, then ITC is claimed on the stocks at the first instance as well. Okay. The ITC is claimed in the initial phase itself. Okay. In that particular case, the ITC is already availed and the goods are not entered into production. Now, suppose before the goods enter into production, guys, before that, constitution of the organization change. Organization is sold to someone else. Organization is sold to someone else. In that case, guys, the ITC which is availed on opening stock is to be reversed because the organization is sold to someone else. An ITC has already been claimed, but it has not been used in the business. It has not been used in the business. So a very, very important case, which is section 18, ITC on opening stock. What will happen to ITC on opening stock? So, fresh registration, that is within 30 days, a fresh registration is taken, or in case of voluntary registration, or a withdrawal of levy, a composition levy, or when exempt goods become taxable goods. In these particular cases, this section will apply on the opening stock, the ITC which is available on opening stock. 1 year from the date of invoice, this is the timeline within which this ITC is to be claimed by the person. Then what will happen with unutilized credit which is there in case of constitution? The unutilized credit which is there in case of reconstitution of the organization, or when the organization changes its constitution, then transfer of all liabilities. If all liabilities are transferred, ITC transfer to resulting company. The resulting company will be able to claim the ITC. This is a very good benefit which is given in case of reconstitution. In other cases where liabilities are not transferred, ITC is not transferred to the resulting company. Guys, obviously, the resulting company will always want to claim credit of the ITC which has been paid by the original company, which is being merged into the other company. Okay, but cannot be done if the rules are not satisfied. Lapse of ITC on inputs or capital goods. The ITC will lapse if the inputs or capital goods, if composition levy, if you convert it from the normal levy to composition levy, because in composition levy there's no levy of GST. So soon as you convert from normal levy to composition levy, your ITC will lapse on input goods and capital goods. Then if taxable supplies become exempt, second case is if taxable supplies, you are supplying taxable goods, but it suddenly becomes exempt in the list of exemptions. In that case also, the ITC will lapse, ITC will go. Then prescribed rules to be followed. Yes, some rules are to be followed in this case. ITC reversal on sale of capital goods. If the capital goods are sold at a subsequent point, then the ITC which is availed on those capital goods must be reversed. So ITC reversal on sale of capital goods. If capital goods are reversed, then if capital goods are sold after being bought, then ITC which is claimed in year 1, that is to be reversed by the taxpayer. ITC taken minus 15% per quarter from the date of invoice. That is the formula of reversal of ITC. How much ITC should be reversed? ITC which has been claimed in year 1 minus 5% per quarter from the date of invoice of that particular capital good. This ITC is to be reversed. Then tax on transaction value under section 15. Whatever is the tax which is there on the transaction value, whatever transaction value means the actual value on which the goods are sold, the capital goods are sold, that is the transaction value. So either the ITC should be reversed on the basis of this formula, or ITC should be reversed as a tax on transaction value. Whichever is higher out of these two is to be reversed as ITC. That is the important thing. Reversal of opening stock. Yes. हायर क्योंकि गवर्नमेंट को घाटा नहीं कराना अपने रेवेन्यू का. वेरी वेरी गुड थॉट, वेरी वेरी गुड थॉट. Higher is because government doesn't want to lose its revenue, because sometimes what happens is the capital goods are being sold at a very high price. So if this formula is used in that case, there will be a huge loss to government of India. Okay, so when transaction value is higher, then tax will be as per this value, or if this is higher, then tax will be as per this value. The reversal will be using these values. Okay, guys, and I really become happy, guys, when you remember the things which I taught you in the class. I really become happy. Very, very, very good. Okay, very good, guys. Superb. And the next concept, and a very, very important concept, is input service distributor, which is the ISD. Input service distributor, which is the ISD. What is the role of ISD? Guys, sometimes what happens is the head office is availing all the ITC, and the services are taken from the services are taken by the branches. So I'll give you an example. I have a office in Delhi. I am the main head office in charge of my Delhi operations, and I have a office in Delhi. I have an office in Kanpur, I have an office in Gujarat, I have an office in Chennai, I have an office in Punjab, I have an office in Rajasthan, I have an office in Kerala, I have an office in Chennai, I have an office in Assam, I have an office in all over the world. In the entire country, I have my offices. Soon as I want to buy something, I will of course buy it for the entire country. My offices, which are located in the entire country, I will buy everything for the entire country. For example, if I'm buying softwares, I'm buying Tally, I'm buying Microsoft Excel. Because in that case, I will not only buy for my Delhi office, I will buy for the different states which are in which my branches are there. Now, when I buy it, ITC will be available to me, but I want to distribute this ITC to all my branches which are located in different parts of the country. Depending upon what expenditures are attributable to them, I want to distribute the ITC to my different branches. If I want to do that, I'll be called as input service distributor. Input service distributor, a person who's centrally located and he distributes the input services which are availed. He distributes it to all the branches of that particular organization, which are typically the DDPs, deemed distinct persons. It will distribute these services. So the conditions which are required to be met is for the ITC attributable to a recipient, then credit of ITC is given to that recipient. Okay. If ITC is attributable to multiple recipients, then ITC should be distributed among multiple recipients. In the formula, in which formula is to be used? Common ITC credit which is there, divide by state turnover of such recipients, multiplied by state turnover of all the recipients. Okay. So in the denominator, there will be state turnover of all the recipients, and in the numerator, there will be state turnover of only those recipients to which we need to divide the common credits. This is the formula which is used in the second part. The third part, where ITC is attributable to all the recipients, as in that case, common credit formula remains the same. We divide by state turnover of all the recipients, multiply by state turnover of only such recipients to which the common credit is to be apportioned. A simple pro rata mathematics, absolutely mathematics. Yes, absolutely mathematics. Yes. Okay, so this was the concept of input service distributor. So yes, guys, hereby we finish the concepts of ITC, input tax credit. And now we are going to start the next topic, which is the registration topic. And yes, again, this topic is actually the final or the last large topic which is there in your syllabus. Okay, so the registration is the last large topic which is there in your syllabus. Registration, yes. Oh yes, guys, I'm feeling so dizzy, I'm feeling so lack of energy is there. ओ माय गॉड, बहुत तेज कमजोरी सी लग रही है भाई, थक गया मैं तो बहुत ज्यादा बोलते बोलते. क्या आप सब मुझे कोई एनर्जी ड्रिंक देंगे जिससे मेरे अंदर एनर्जी वापस आ जाए? कोई एनर्जी ड्रिंक दे दीजिए जो मेरे अंदर एनर्जी वापस आ जाए, नहीं तो मैं अभी बेहोश हो जाऊंगा. अरे बाप रे, चक्कर आने लगे हैं. उफ, अब तो मैं दिखना भी बंद हो गया आप लोगों को. मुझे चाहिए कोई एनर्जी ड्रिंक जो मुझे वापस एनर्जी फुल कर दे और हाई जोश के साथ हम अपना नया चैप्टर शुरू कर पाए. आई आई कैप्टन. ओह, मेरे को एनर्जी वापस मिलने लगी. कैसे? क्या आपने भेजा चैट बॉक्स में कुछ? यस, आप लोगों ने भेजा चैट बॉक्स में लॉट एंड लॉट ऑफ थम्स अप. इफ यू गिव मी थम्स अप, I'll regain my energy back. Yes, Sai Luthra is giving me some bad things. कीर्ति बत्रा gives me thumbs up. Very good. आज मेरे पास नूडल्स हैं. कीर्ति बत्रा is giving me noodles. Is it noodles or Maggie? Please give me some more thumbs up, guys. I'm waiting for your thumbs up. I've not received enough thumbs up. Please give me some thumbs up. And please hit the like button in the live stream. Hit that like button. It'll be very useful to me. बताओ क्या लोगे सर जी? कैसी एनर्जी ड्रिंक लेना चाहोगे आप? चिराग खेमानी is asking. Chirag, my energy drink is your thumbs up. If you give me thumbs up, that is energy drink for me. I'm on my way to Daryaganj bringing petrol pump. I am not a motor vehicle that you will feed me with petrol. Am I a motor vehicle? Am I a human being or a motor vehicle? I am a human being, not a motor vehicle. Okay, guys. Now starting with again, a theoretical but an important topic of our syllabus. The topic's name is registration. Topic's name is registration. What do you mean by registration? What are the thresholds of registration? That is what we are going to discuss now. Yeah, Kavya has given me strawberry. Kavya has given me apple. Kavya has given me cupcake. Thank you, Kavya. Rika balls. What is Rika balls? Blood. Zainab is so violent, girl. She is very, very violent. Blood, injections, all these things. मेरे पास चिकन फ्राई है. आई एम अ वेजिटेरियन. आई डोंट वांट चिकन फ्राई. अच्छा, राइस. ओके, राइस बॉल्स. ओ, राइस बॉल्स जो डोरेमोन खाता है, जो डोरेमोन खाता है राइस बॉल्स. जिंदगी सवार दूं, एक नई उड़ान दूं, मैं तो सबका सपना हूं जो हो गया है सच. मानो या न मानो, मानो या न मानो, मैं हूं एक उड़ता रोबो, डोरेमोन. डोरेमोन वाले राइस बॉल्स है ना ये. यस, अनुराज ने केक भेजा है. वाह अनुराज, केक तो जबरदस्त है. केक तो जबरदस्त. काजू कतली एंड चॉकलेट. ओहो, जनाब के पास काजू कतली एंड चॉकलेट है. उजल इज गिविंग मी watermelon, oranges and apples. Thank you so much, Ujjal. Yes, yes. Wrong lyrics. Okay. Okay, guys, let's start the most important, one of the most important topics of our syllabus, which is registration. And in this particular, guys, in this particular topic, we are going to study what are the thresholds above which registration is required to be made. What are the thresholds above which registration is required to be made for any person in respect of GST, and above which threshold the GST compliances are required to be done. That is the registration threshold in case of GST section 22. So what are the threshold of registration we are going to study now? Yes, for Doraemon fans, comment yes. Back to studies. सर, अपने को छोटा बच्चा साबित करते हुए गाना गा के. हाँ, तो मैं तो हुई छोटा. मेरी एज कितनी है? मेरी एज आप लोगों से 6 महीना छोटी तो है. मेरी एज आपसे छोटी है. फिर वही ऐसे ही तो होता है. Okay, threshold for registration under GST. Okay, so guys, the threshold for taking GST registration is 20 lakh rupees. The threshold for taking GST registration is 20 lakh rupees. So, you know, when you are starting your business, unless and until you reach 20 lakh threshold, you do not need to take any GST number. But once you meet the 20 lakh threshold, then the date when you meet the 20 lakh threshold, guys, from that date onwards, you need to comply with GST. Now, my question to you is, should we take this benefit of 20 lakh every year or only in the first year? Please write in the comment section. Please write in the comment section. 20 lakh benefit is there. So up till 20 lakh, you need not pay any registration charges. You need not get yourself registered in GST. You need not pay GST on the output supply, on the outward supply, up till a limit of 20 lakh. But soon as you touch 20 lakh, you have to take registration. You have to comply with GST requirements. My question is, this limit is only applicable for the first year, or we can take this limit every year? Yes, very good answer. Very good. Only the first year. Once you come under the purview of GST, then for the next year, for the immediately next year, you will always be required to comply with GST law. And broadly speaking, the most important threshold of GST is when the aggregate turnover of the current financial year is 20 lakh rupees. Please remember, current financial year, not previous financial year. Previous financial year turnover is irrelevant. Current financial year turnover should be 20 lakhs, above which GST is required to be paid. Now, there are certain other limits like 10 lakh rupees, like 40 lakh rupees, which are there in certain specified circumstances, which we are going to discuss now. Okay. Now, in case of special category state, if you are a special category state, then guys, your aggregate turnover should be greater than 10 lakh rupees to get availed in the GST regime. Now, guys, in these special category states like Manipur, Mizoram, Nagaland, Tripura, Make My Trip for Nagaland is the abbreviation for this. Make My Trip for Nagaland. In these cases, guys, the state government says that if the threshold is 20 lakh rupees, then all our businessmen will be out of GST. We will not have funds to raise our state. So in this case, because of a special permission which these state representative took from the government regarding the registration requirements, they said that please don't have the turnover as 20 lakh rupees because it's too huge for a small state like Manipur. It's too huge. Please reduce it to 10 lakh rupees. So the threshold for these states is 10 lakh rupees for goods, services, or if you're supplying both. For goods or services or both, the threshold limit is, for the current financial year, the threshold limit is 10 lakh rupees. Now, in case of other states, apart from these states, in case of other states, what are the threshold which are there? Let's see. Threshold is, if you are supplying only goods, which is exclusively you are supplying goods, which according to me is a rare possibility. Everyone who's supplying any goods has to mandatorily supply some bit of services, either 2%, 3%, 5%. Some bit of services are mandatorily required to be supplied, even if you are supplying only goods. So this exclusivity condition ruins the practical aspect of this particular section. So practically this section might not be applicable in many cases. Practicality of this section is ruined by this exclusivity. You have to only give this threshold to person who are supplying goods. Only goods, not anything else, no services. So what are the threshold in this particular case? For the following states like Arunachal Pradesh, Meghalaya, Puducherry, Sikkim, Telangana, Uttarakhand, we have made an abbreviation. Megha and Uttara sat together to have cherries. Okay. So as for these states, the aggregate turnover should be more than 20 lakh rupees. Aggregate turnover should be more than 20 lakh rupees, but the condition is that only goods are required to be prepared by these particular people. Then for other states, guys, the aggregate turnover is 40 lakh rupees. Now it's a very big amount of the exemption, and the amount is really high, 40 lakh rupees. Up till your revenue of 40 lakh rupees, you're not required to get the registration done. What an amazing benefit. What an amazing benefit. But practically not usable much. Why? Because you need to supply only goods, exclusively goods, to avail this benefit, which might seldom happen, which might rarely happen. It is practically not possible, guys. So yes, 40 lakh limit is there, but only for people who are supplying goods, and that too in different states. Now that is the condition. Okay. Now in case of manufacturer of ice cream, pan masala, tobacco, aerated water, fly ash bricks or blocks, bricks of fossil metal, building bricks, earthen roofing tiles, in this case the limit will again be 20 lakh rupees. Limit will not be 40 lakh rupees. 40 lakh rupees is for goods which are manufactured other than these specified supply of goods. Okay. Then supply of services. What will happen if supply of services or both means goods and services both are supplied? In that case, guys, aggregate turnover should be 20 lakh rupees. Again, I'm repeating my earlier statement, guys. Practically 20 lakh rupees is the threshold. 40 lakh is not a practical threshold, because there are any industries which are only dealing in only goods, specifically goods. So practically 20 lakh is the threshold, but for examination purpose, of course, you need to remember 40 lakh also, in case where in other states supply of goods are there and exclusively goods are there. In that case, guys, aggregate turnover shall be 40 lakh rupees for the current financial year. That is how the registration thresholds are required to be seen by you. These are the registration threshold. Okay, sir, got it. Now let's come on to the situations where people who are not required to get their registration done. People who are exempt from registration, they are not required to get the registration done. Who are those people? Person not liable for registration under GST. Because guys, if registration is not done, then if registration is not done, then GST is not liable. So it's very, very useful for people. Ujjal says, but deposit exclusion test में consider क्यों नहीं हुआ? Deposit exclusion मतलब इसका क्या मतलब हुआ? कौन सा डिपॉजिट की बात कर रहे हो? ये प्रैक्टिकली नहीं है. गवर्नमेंट इतना लिबर्टी दिया है. Very chalak government. Government is very chalak, like Nikhil sir. Nikhil sir is not chalak at all. Nikhil sir is very, very naive and very, very bhola bhala person. Okay. Now, what are the cases where person is not liable for registration? If a person supplies only exempt goods and services, if a person is supplying only exempt goods and services, he is not required for registration. He's not required to take GST registration, even if the turnover is more than 20 lakh rupees or 40 lakh rupees. Because he's supplying only exempt goods and services, registration is not required to be done. Second case, agriculturist who supplies produce out of cultivation of land. An agriculturist who is producing supplies, and primarily his supplies are cultivation, are growing out of cultivation of land, then GST is not applicable. The registration is not applicable, and hence GST is not applicable. Third, supply of services under RCM. If supply of services done under reverse charge mechanism, then again, guys, registration is not required to be seen. Okay. Then, person liable for registration. Who are the people who are liable for registration? People who are liable for registration. Interstate taxable supplies of goods. People who are doing interstate taxable supplies, they are liable for registration, even if the threshold is not met. So interstate taxable supply of goods, except handicraft made by any person, including CTP and RTP. Then the people who are required to pay tax under RCM. So people who are paying tax under RCM, sometimes they are forced to take registration. Okay, sometimes they are forced to take registration, so they have to take the registration in this case. Person supplying goods on someone else's behalf, like agent making his own invoices. If a person is supplying goods on someone else's behalf, like the agent, in that case also the registration is required to be made, even if the threshold is not met. Even if the threshold is not met. Input service distributors are required to mandatorily get the registration done. Voluntary registration is permissible under 25(3). Guys, please give me some cases where someone will do voluntary registration. Why would someone do voluntary registration under GST? Please give me some examples. We have discussed in great detail in the class. Voluntary registration. Why will someone himself opt for registration under GST? Why would he do this? Then e-cooperators, e-commerce operators are mandatorily required to get their registration done. Okay, so these are the cases where registrations are required to be done and where the registrations are not required to be done. Both the cases have been discussed by us. Okay, sir. Yes. Perfect. Commencement of business for claiming ITC on fixed assets. Very good answer. Very, very good answer. So guys, when the business starts, then the businessman will have to purchase machinery, purchase expensive capital goods, purchase expensive fixed assets. Now, if the registration is not there, if his registration is not there, then he will lose on the ITC on all those purchases. So on a suo motu basis, on a voluntary basis, the businessman will take the registration under ITC even when the turnover does not exceed 20 lakh rupees, so that the ITC claim can be made for all these fixed assets which has been purchased by the businessman. This is one of the major reasons why the option is given to the assessee. Okay, option is given to the assessee to voluntarily opt for the ITC or the registration. Okay, now guys, there are some procedural aspects related to registration. Okay, and this is purely theoretical. You just have to read what are the procedures required to be complied with in case of registration. So these procedures are very very easy. Just remember them, just read them. I'm discussing only the sections and what are those procedures. That's it. I'm not going to nitty-gritties because then it'll be a complete theory class and won't serve any purpose because there's nothing to explain in these provisions. Okay, so procedure for registration, section 25. Deemed registration, where you have not actually taken the registration but government will assume that you have taken the registration, section 26. Then CTP, casual taxable person and non-resident taxable person, section 27, rule 13. Amendment of registration, if registration is required to be changed or amended because of any reason, section 28. Cancellation or suspension of registration when registration is cancelled or suspended by government. Revocation of cancellation, when the registration is revoked, the cancellation is revoked. In that case, section 30 is to be referred. So these are procedural aspect. These are very, very easy and straightforward aspect. Please guys, do them properly. And yes, nothing is difficult when you are with Nikkhil sir, the original Nikkhil sir, not the duplicate Nikkhil sir, but the original Nikkhil sir. Whenever you are with original Nikkhil sir, nothing will be difficult for you. But please note that in market there are duplicate Nikkhil sirs which are roaming about. Okay, and duplicate academies which are claiming that Nikhil sir is with us. Okay, please don't rely on duplicate Nikhil sir. So some people change their name on social media and say CS CMA Nikhil sir. Please don't rely on them. They are duplicate Nikhil sir. They are not original Nikhil sir. And sometimes they also will steal the academy's name and create their own academy with the stolen name. Please don't believe on them. Okay, please believe only on original Nikhil sir, which is standing in front of you. Yes, guys. Now, guys, a very important discussion that we need to do, the utilization of ITC credit. How will the ITC credit be utilized? Okay, how will the ITC credit be utilized? That is the point of discussion now. Okay, yes. Sai Luthra is saying, think IDT, think Nikhil sir. Very good. Zainab Khan is saying, you are duplicate. Achha, I am duplicate. Yes, right. Very good. So guys, there is a manner in which ITC is to be utilized. ITC means input tax credit. You will get input tax credit in form of IGST. You will get credit in form of CGST. You will get credit in form of SGST. All three credits you are going to get. Okay. Now you need to set them off from the outward GST. Okay. Now setting up will be in this particular adjustment, in this particular order. Okay. When there is ITC with respect to IGST, first you will set off with IGST, then you can set off with CGST or SGST as the case may be. Even you can set off partly with CGST and SGST as you like. When there is a ITC claim of CGST, then you have to set it off with the CGST credit first. Then you have to set off with IGST credit, and you cannot set it off with SGST credit. So guys, CGST and SGST, they are like Saas Bahu, mother-in-law and daughter-in-law. They will always fight with each other. They will not they will not remain together at any point in time. They will always fight with each other, SGST and CGST. So the ITC of CGST cannot be adjusted with outward tax liability of SGST and vice versa. So ITC of CGST can never be adjusted with SGST. ITC of SGST can never be adjusted with CGST. That is the rule. Okay. So ITC of SGST will be first adjusted with SGST, and then if it is remaining, then it is adjusted with IGST. So these rules are to be very carefully followed by you, and these rules are to be adhered to in the questions, because guys, there'll be practical questions with respect to GST liability which will be asked by you in the examination. Okay, sir, we got it. Yes, guys. Okay. Registration is done. Invoice section we have covered in the last class. In the earlier class, guys, we have covered the invoice section. Okay. Kaju Singh says, be aware, guys, some duplicate Nikhil sir have been imported from China to compete with the original one. Very good. Kaju Singh has stated the right thing. Kaju Singh, very good. Very good, Kaju Singh. Okay. Now, guys, some important discussion with respect to one topic, which is TDS. And yes, if you are the new syllabus students, then TDS is not applicable on you. If you are the new syllabus students, syllabus 2022 students, then you can just listen to the conversation that we are having. But this is not relevant for the new syllabus students, syllabus 2022, for their examination purposes. It is not relevant. It is only relevant for syllabus 2016 students. So new students can listen to it because it will be useful for them in CMA final, but otherwise it is not applicable for the new syllabus. This chapter is only applicable for the old syllabus, which is syllabus 2016 GST group 2. For those students, this topic is relevant. Otherwise, this topic is not relevant. Now, guys, TDS is a concept which is introduced in GST as well as DT for plucking the loopholes in GST. Now, there are many suppliers who would collect GST from recipients, but they will not remit it to the government of India. There are many suppliers who are collecting GST from the recipients. They are collecting GST from the recipients, but they are not paying GST to Government of India. There are many suppliers which are available in market. So to club this revenue leakage, government has introduced the provisions of TDS. What does TDS means? TDS means tax deducted at source. So what will happen is, this supplier is a bad supplier. He has bad intention of not paying GST to Government of India. He is what is he wanting to? He's just wanting to collect GST and eat it away and not pay to Government of India. He's a regular defaulter. He's a regular defaulter. Okay. Now the recipient is paying GST honestly to the supplier, but supplier is not further remitting GST to Government of India. So what has Government of India done to curb these situations? Government of India has instructed the recipient to deduct some TDS while making payment to the supplier. Let me repeat. Government has instructed the recipient to reduce some amount, to withhold some amount while making payment to the supplier and give that amount to Government of India. Like 2000 rupees is given to Government of India. I'll give you a practical example along with numbers. Value of the goods supplied by the supplier is 1 lakh rupees. GST is 18%, so 1,18,000 rupees is collected by the supplier. 18,000 rupees is remitted to Government of India as GST. 1,18,000 is to be paid by recipient to the supplier. Now supplier has to receive 1,18,000, but actually the supplier will receive only 1,16,000. Supplier will receive only 1,16,000 and not 1,18,000. 2,000 will be withheld by recipient and will be paid to Government of India on behalf of the supplier. Supplier has paid 18,000, right? A recipient has paid 2,000. Now this 2,000 will be refunded to the supplier or will be adjusted using the cash ledger of the supplier in the future adjustments of the supplier. What is the idea? Why are we doing this complicated thing? The idea is the Government of India wants to catch hold of the suppliers who are collecting GST, but they are not paying to Government of India. That is the idea behind this particular tax deducted at source concept, which has been launched by the Government of India. So the consideration will be 1,16,000, which is paid by recipient to the supplier, but the supplier is not going to lose 2,000 because from its further tax liability, he can adjust the 2,000 rupees TDS, which goes into the cash ledger of the supplier. So using this concept, Government of India wants to curb the revenue leakage with respect to suppliers. Okay. Now, guys, obviously this is a complicated process and this process is difficult to be adhered to. अब वो 16,000 नहीं देगा तो गवर्नमेंट नोटिस देगी, right? Yes, Zena, very good thought. If this 18,000 rupees is not paid by the supplier to the government, then government will give a notice to supplier that, look supplier, 2,000 rupees of TDS has been deposited by the recipient on your behalf to us, which means that you should have also paid us something. Why have you not paid us something? Government of India will catch hold of the supplier. Government of India will say 2,000 rupees has been paid by the recipient on your behalf to us. So obviously you should also pay something to us. That means you are making some taxable supply. Please give GST, which you are required to pay. So this is the concept because of which the TDS provisions are launched. Okay. सर अमाउंट ऑफ कैश लेजर को विड्रॉ कर सकते हैं? विड्रॉ नहीं, एडजस्ट. भाई विड्रॉ नहीं करेंगे, कैश लेजर में जो अमाउंट जाएगा उसको एडजस्ट करेंगे इन द फ्यूचर टैक्स लायबिलिटीज. इट विल नॉट बी विड्रॉन, इट विल बी एडजस्टेड. Yes. Okay. Now, guys, TDS is a complicated process and it's a process which requires a lot of reconciliation, a lot of coordination between the supplier and the recipient. So as of now, the concept of TDS is applicable only to select few recipients. Only to selected recipients, the concept of TDS is applicable. Who are those selected recipients on which the TDS concept is applicable? Only to the recipients when they are central government, recipients when they are local authority, recipients when they are society established by central government, state government, or local authority, government agency, anybody with more than equal to 51% government equity, or public sector undertaking. So the recipient should be one of these. Supplier can be anyone else. Recipient should be one of these. Supplier can be anyone else. But if supplier is also central government and recipient is also central government, then TDS is not applicable. So supplier has to mandatorily be a non-government person. If the transaction is between government and government, no TDS is applicable. Only when the supplier is a private person and the recipient is government authority or government department, only then TDS provisions will be applicable. So currently TDS is applicable only in a shorter, in a narrower sense, which means recipients which are government recipients, only for those recipients TDS provisions are applicable. Otherwise TDS provisions are not applicable at all as of now. Okay, that is the main crux. So this is how TDS provisions are constructed. And what is the percentage of TDS, guys? Percentage of TDS is 2% of the contract value. So if the contract value is 1 lakh rupees, then 2% of contract value is the amount at which TDS is to be deducted. And the contract value, the entire contract should be above 2.5 lakh rupees. So the contract should not be a smaller contract, it has to be big contract. Only then TDS is deductible, otherwise TDS is not deductible in this particular case. Okay, sir, got it. So these are the provisions of TDS. And yes, we have pretty much completed the concepts of TDS also. Last concept, guys, last concept, TCS, tax collected at source. Last concept, TCS, tax collected at source. Now, this is a concept which is applicable to e-commerce operators. E-commerce operators, this is a concept which has been introduced only and only for e-commerce operators. Guys, who are e-commerce operators? E-commerce operators are the middlemen who provide the connection between suppliers and the recipients. These are the e-commerce operators. So suppliers and recipients are connected through e-commerce operators like Amazon, Flipkart. These are the e-commerce operators. Even Ola, Uber, Oyo Rooms, all these are e-commerce operators. So in case of e-commerce operators, guys, there's new concept of tax collected at source which has been introduced. Again, the reason is the same. We want to catch hold of the defaulting suppliers. We want to catch hold of suppliers who are not depositing GST on time. So whenever e-commerce operator is receiving money from recipient and transferring to the supplier, then guys, while transferring this money, TCS is to be collected at 1% of the net value of taxable supplies. So the e-commerce operator will deduct TCS and will remit the remaining amount to supplier. 1% TCS will be given to Government of India. So this is the same concept. Why to name it as tax collected at source? Why not tax deducted at source? Name should have been same, sir. Tax deducted at source. This is also tax deducted at source. This is also tax collected at source. This is one and the same thing. So why different name? The reason why different name is there, because tax deducted at source is in a case where the tax is deducted by the recipient. Here the tax is not deducted by the recipient but by a middleman, and hence the name of the this thing has changed. It is tax collected at source. In case of TDS, guys, the tax was deducted by the recipient of the supplier, but in this case the tax is not deducted by the recipient, it is deducted by the e-commerce operator, the middleman who's there between the two, and that is why the TCS is there, tax collected at source. And yes, again, the credit will be available to the supplier of the TCS which has been deducted, same way as the way in which TDS credit is available to the supplier. Okay, all right. Yes, guys, so yes, TDS and TCS, important topics we have covered. We have covered registration in today's session, and we have covered the most important and the biggest chapter, one of the biggest and most important chapters of your syllabus, which is ITC, input tax credit. So we've pretty much done all this stuff in today's session. And guys, now only the theoretical chapters are left, like invoicing or the procedural aspect of registration, which has nothing to explain or nothing to really discuss in detail. Okay, so yes, I would recommend to you to do all those small procedural aspect, theoretical aspect yourself, and be ready for the GST examination. Be ready for the provisions of GST, and be ready to score good marks in GST, because GST is one such subject which is very, very small, very, very straightforward and easy. It's just that you have to remember certain things well. And if you do that, no one can stop you from claiming 90% marks in GST. It is that easy. Both CMA Intermediate and CMA Final, both of them, GST is absolutely important. So guys, tomorrow we'll be starting our marathon on customs, okay? And probably I'll take only 1 or 2 classes of custom and custom will be over. So tomorrow we'll be completing with the customs topic as well. So yes, that's all for this particular session, guys, and we'll be meeting in our subsequent sessions with more sections and with more rocking performance with respect to our examination and the chapters and the sections. Guys, before I sign off, please write in the chat box, how's the Josh for the upcoming examination? Is the Josh high, very high, or very high? Please write in the chat box, how's the Josh? Because come what may, we need to achieve our goals. We need to achieve our targets under any circumstance. We need to achieve our targets, and the whole and soul focus right now will be on our goals, on our targets, and bang on, guys. We are going to achieve all our targets for sure. So how's the Josh? Yes, very high. Amazing. Superb, guys. Superb. Nice. All right, guys. So yes, that's all for this particular session. All the very best and happy studying. Bye bye. See you in the next session.